RBI cuts reverse repo rate by 25 bps to 3.75%. The RBI governor on 17th of April came up with fresh initiatives for maintaining liquidity. This was by incentivizing banks to ensure better credit flow and enabling normal functioning of the financial markets. Before we get into further details, do subscribe to this channel and hit notification icon for future video alerts. Also find link in description to my video on how to get free stock price alerts on your cell phone. RBI has reduced the reverse repo rate by 25 bps to 3.75%. This will discourage commercial banks to park cash with the RBI and push for more lending. Once the lockdown is over, this will be a very good initiative to boost liquidity in the economy. This is in sight with the inflation numbers, which are likely to fall below its target in the next 40 to 60 days. This will further enhance meeting the current coronavirus crisis. This second action is followed by RBI's earlier action on March 27, where it slashed the repo rate by 75 basis points to 4.40% from 5.15%. This was in consideration to its initiative to help the economy fight this deadly pandemic. This was in parallel to rate cut by 90 basis points to 4% from 4.90% to ensure that banks start lending to the productive sectors of the economy, and simply don't pass on the money to the RBI. TLTRO 2.0 is RBI's targeted long-term repo operation, where it will pump in 50,000 crore to help microfinance institutions. The primary condition for this is to disperse loans within a month. TLTRO 1.0 was specifically for the PSUs and large organizations. The second initiative was more towards shadow banking and microfinance sectors. The governor also said the 90-day non-performing assets norm would not apply on moratorium granted on existing loans by banks. The liquidity coverage ratio requirement of scheduled commercial banks has been reduced from 100% to 80% with immediate effect. This is the same provision of highly liquid assets held by a bank to ensure their ongoing ability to meet short-term obligations. This looks like a very good initiative to free up more capital for the banks to deploy in the market. The governor added, these announcements will be rolled back in two stages, one in October 2020 and second in April 2021. DAS also asked banks not to pay any dividend to meet current financial difficulties arising from this pandemic, moving towards institutions such as NABARD, SIDBI, and NHB, since they are not being able to raise fresh finance from the market. A special package of 50,000 rupees crore has been announced for them. He said, the RBI has been very proactive in the wake of the ongoing virus outbreak and the central bank is monitoring the evolving situation closely, adding that India would do whatever it takes to stop the coronavirus from spreading. During our darkest moment, we must focus on the light, he said. DAS said banks and financial institutions have risen to occasion to ensure normal functioning during the outbreak of the pandemic. He said the macroeconomic landscape has deteriorated severely in some areas, but added that India still is among a handful of countries projecting positive growth. Taking about the impact of the ongoing lockdown, DAS said power demand in the country has fallen 35 to 30%. Also, the fall in India's exports in March was much more severe than global financial crisis. If you have liked this latest repo rate updates, do subscribe to my channel and hit the notification icon for future video alerts.